Yes, so this is lesson 2, no, okay, lesson 3 of the cash flow statement. So we are going to continue with what we were doing. Now, but before we continue with what we were doing, someone asked something to do with the dividend paid. Now, the dividend paid in this question was 0. So dividend paid was 0. How do you get the dividend paid? This is how you get the dividend paid. So dividend paid dividend paid is equals to the retained earnings at the beginning. So dividend paid, retained earnings at the beginning. Beginning is supposed to be ing. Then you add profit after tax. Profit after tax. After tax. Then you less retained earnings at end. Once you do this one, you shall get what we call the dividend paid. Dividend paid. So if we consider this question for December 2024, if we go to our balance sheet, the retained earnings at the beginning was 86,58,000. It was 86. Let's do it here. 86, 58. It was 86, 58,000. We are supposed to add, so this one was the retained earnings. Balance brought down. Then we add the profit after tax. Now profit after, this is the profit before tax. So profit after tax iko kwa swali pale juu, kwa income statement uko juu. So profit after tax it was 1728. 1728 for 80. 1728 for 80. Then you are supposed to less the retained earnings. Balance carried down. That's the balance at the end, which in our balance sheet, if you go to our balance sheet, is 10,386. 10,386. 10,386. 10,386 for 80. For 80. So shall I get the dividend paid? Dividend paid. And in this case, I think it was 0. So we didn't have any dividend paid here. So I took Weka because it was 0. So dividend paid 0. Dividend paid is 0. Let us confirm. 86,58,000 plus 1728 for 80 minus 10,386 for 80. So the party is 0. That was the dividend paid. That was the dividend paid, which is 0. So in this case, nikumaanisha if we were to put so kama hapa tungepata a figure of, for example, 1 million, ngoja tuweke hapa. So kwa cash flow from financing activity, tungeweka dividend paid that amount. But in this case, the dividend was 0. So there was no it was not necessary to put the information here because already the dividend paid was 0. Dividend paid was 0. So today we are going to do another question, and that question we shall go to this sitting. Let me check. Let me check. We shall do several of them, but not all. We shall not do every question, but several of them. We can do this sitting of August 2024. So August, actually in Yohi, August 2024, question number 4. This one was the question we were supposed to do in our in this class. August 2024, question number 4. So August 2024, question number 4. So the question is for August 2024. August 2024. The question is about Precious Ltd. So the question is about Precious Ltd. So I'm going to read the question. Now, the following financial statement of Precious Ltd for the year ended at 1st March 2023 and that 1st March 2024. So we have the income statement and we have the statement of the financial position. Now we have some additional information. We shall work on this additional information actually. So that will be our that's what we shall be doing. So we start with those workings. Let's start with the working number 1. So precious LTD purchase and investment was 1700 during the year. So that we have an acquisition of investment. So that we have a purchase or the acquisition of investment. So we say working number 1, we have acquisition of investment, acquisition of investment, acquisition of investment, which is 11,700. We shall put our items in thousand. We shall put our item in thousand. So acquisition of investment 1,700. That one will go to the investing activities. So that one will go to the investment activities. That one is okay. Number 2, the company sold an investment which had the cost of 13,500 for 15,300 during the year. Now we can get the profit from sale of investment. So profit from sale of investment, profits from a sale of investment. Now profit from sale of investment, so anatuambia ilikuwa na cost ya 13,500 wakauza 15,300. So itakuwa ni 15,300 minus 11. So 15,300 minus 13,500 minus 13,500. So get the difference. So the difference hii itakuwa ngapi? So 15,300 minus 13,500, that is 1,800. That is 1,500. 1,500. Also we have sales proceeds from investment. Investment hiyo tunajua ni 13,500. So sales proceed hiyo ni 13,500. No, not 13, 15. Waliuza pesa ngapi? Waliuza 15,300. They sold it at 15,300. 15,300. Ndio hapa. So they sold it at 15,300. So we have a sales proceed of 15,300. That one will also go to there. So acquisition of investment inaenda kwa investing activities. Sales proceed from that investment will go to also to investing activities. Then profit from sale of sale of an investment, that one automatically will go to the adjustments. So that one will go to the adjustments. We continue. Tumemalizana hiyo. We continue next. During the year, a new machine of worth 18 million was acquired. So we have another acquisition. Acquisition of machinery. 18 million. So that one will also go to the investment activities. So that one will go to the investment activity was acquired. Some item of the PPE, which had cost of 1.5 with accumulated depreciation of 300 was disposed during the year at 17,500. That one is okay. We can prepare the PPE account. But before we prepare the PPE account, we can prepare the disposal account. So let's start with the disposal account. Disposal account for the machine that was disposed. So we start with the cost. So the cost, so what was the cost of the item we disposed? So anasema some items of the PPE which had a cost of 1,500 was disposed. So the cost was 1,500. We also check for the accumulated depreciation. Now what's the accumulated depreciation? Accumulated depreciation was 300,000. So accumulated depreciation on disposal. So we say accumulated depreciation on disposal. Amesema ni ngapi? So the accumulated depreciation was 300,000. So 300. 300. Then we check if we had the what was the sales proceed. So sales proceed from that item waliuza pesa ngapi? So the item was disposed at 750. So that is the sales proceed. Now this question ukiangalia tumepewa sales proceed 750,000. Now we need to balance this account. So remember the previous question tulifanya ya December 2024. Remember we were not given the sales proceed when we were preparing the disposal account. Remember when we were preparing the disposal account, it's either we determine the sales proceed or determine gain or loss on disposal. Now the previous question, we were supposed to prepare the sales proceed. Reason why? Because we were provided with the value of the profit or loss on that asset. That's the PPE. So that's the PPE. So but in this case, hatujapatiwa loss or gain, tumepatiwa sales proceed. Now the balancing figure will be the gain or loss on disposal. So on this side, balance figure equals this side is a gain. Equals the other side is a loss. So when the balancing figure is on this side, it's a gain. When it's on the other side, it's a loss. So in but with this item tunaona the balance figure itakuwa the other side, on the credit side. So balance figure itakuwa side hiyo, so 1500 minus 750 minus 300. 450. 450. I think tuko sawa. 450. So tumesha prepare the disposal account. We can also prepare, so after the disposal account, we can also prepare the PPE account. So PPE account, because we had the disposal, kumbuka in 750. Sorry, supposed to use a different pen. Supposed to be 750. Au mwingine ni 450. 450, that one is okay. Now let's prepare the PPE account because there was a disposal actually. Let us prepare the non-current account. We call it the PPE account. We call it the PPE account. PPE account. So the item will be prepared on cost. So we start with the balancing figure. So the balance at the beginning for PPE, tunaenda kwa balance sheet yetu, the statement of financial position. So PPE, the balance at the beginning ni 107. The balance at the beginning is 75,750. 75,750. So balance go down. Balance go down. Wanasema ni 70, 75,750. So it is on cost. Remember, these items are prepared on cost. Balance carried down. Balance carried down run 107 to 50. 107 to 50. Now, before we get the balancing figure, let us look for the item which affects this account. One of those items is acquisition. One of these items is acquisition. But we know we had acquisition of machinery here. So acquisition. Remember acquisition. So acquisition is one of them. So acquisition of machinery. Acquisition of machinery. So we have acquisition of machinery. Machinery is a PPE account. Here we have 18,000. That's one item. Another item which affects this account is the cost of the disposal. So the item that was sold, it was sold on cost. It was sold, but the value has its cost. So so the item that was sold, that was disposed, had a cost of 1,500. So tunasema disposal cost. Disposal cost 1,500. Now we can balance this account. Now we can balance this account. There is no any other item. There's no any other item at the moment which affects this account. Now, the balancing figure will also be another acquisition. So the balancing figure, it means we shall have another acquisition. So let's see. 107 to 50 plus 1,500. That is 108,750. 108,750. 108,750. 108,750. Now the balancing figure in this case, it acquired another acquisition. So it means they acquire another asset. So apart from the one in additional information, it means there was another asset which was acquired because we have a balancing figure here. Acquisition. Oh, it can be revaluation. Let us see if we have the revaluation in our balance sheet. Do you have revaluation account? No, there is no revaluation account. Meaning, kama hakuna revaluation account, kumaanisha there is no revaluation here. So another item which affects this account is revaluation. Now from the question, from our statement of financial position, there is no revaluation, meaning there was no any revaluation. that occurred during the period. And therefore, the balancing figure will also be another acquisition of another asset. So let us balance it. So 108,750 minus 75,750, 75,750 minus 18,000. Napata figure ya 15,000. Now this 15,000 most probably tutaangalia kama ameongelea anything to do with this acquisition, because we have this acquisition of machinery 18,000. We shall see if there was another acquisition of machinery of worth 15,000 as we progresses. But we continue at the moment. So we continue. So I think tumemalizana information number 1, tumemalizana information number 2, number 3 tumemalizana nayo. Number 4, included in the operating expense for the year March 2024 was the depreciation charge for the year of amounting 5,500. So tumepatiwa. So hiyo depreciation in most cases au kwangu umepatiwa. So let me show you how to prepare the depreciation account. So wametuambia ni ngapi? 5,550. So wametusha tupatia. So other question kama tulifanya 2024 ya December 2024, we were not given depreciation, and therefore we need to prepare it. So in this case tumepatiwa, but let us confirm if it's the correct figure. So you prepare the accumulated depreciation account. Accumulated depreciation account. So we start with the balance brought down. Balance brought down. So tunaanza na balance brought down. Balance brought down iko huko juu kwa PP. So tunaenda kwa balance sheet yetu. Hapo kwa PP chini yake we have the balance at the beginning, which is 10,200. 10,200. 10,200. Then you have the balance carried down. Balance carried down part naona ni ngapi? 15 for 50. 15 for 50. 15 for 50. 15 for 50. Then we check any other figure which affect this account. The only item which affect this account we need to remove is the accumulated depreciation of the item that was disposed. So remember tulikuwa tumeuza an item here. Nakumbuka to dispose this asset. So we had this accumulated depreciation. This accumulated depreciation lazima tuweke hapa. So we say accumulated depreciation on disposal. That's the only account, which is 300. Now we get the balancing figure. The balancing figure will be the depreciation for the year. So balancing figure, call it depreciation for the year. For the year. Other people call them the depreciation charge. So what wengine wanaitanga the depreciation charge is the correct, is the same amount, or is the same thing, depreciation charge or the depreciation amount. So tunasema ni 15 for 50 plus 300, which is 15,750. 15,750. 15,750. So the distribution for the year must be the same as the one which is tumepatiwa kwa our additional information number 4. Yeah, 5,550. So let us less. So minus 10,200. So 5,550. That one is correct. So this one was just to check. So this one was just to check if the depreciation tumepatiwa pale kwa our additional information is the same. Je, hiyo 5,550. That one is okay. Let's go to information number 5. Information number 5. The company issue a bond of worth 15,000 at a face value in exchange of plant and assets. Ndio hiyo tumeona. Now this asset tumesema hapa we had another acquisition of 15,000. This one was for exchange. So sisi tulinunua PP ya 15,000 but tuka exchange with a bond. So that bond tutaandika hapa. So we have another item, bond. The value is 15,000. So that bond is what we use to acquire the PPA. So we exchange the bond with the asset. So kumaanisha this asset that was purchased was exchanged with a bond. Now the movement of cash, remember, the movement of cash will be the bond. So tukienda pale kwa our cash flow, the item that we shall record is 15,000, but on what? Not on acquisition, but on the transfer of bond. So that will be financing activity. So tumeshaona. So this 15,000 tumejulia imetokea wapi? Ilitokea from there. So tulikuwa tunanunua PP, but we bought the PP through exchange of a bond. So through exchange of a bond. So the company issued a bond of 15,000 at the face value in exchange for plant assets. That's the PPE. And then tukalipa, so we repaid. So there was another repayment of bond. We need to consider that one. Repayment of bond. So the repayment of bond was 7,500. That one will also affect the financing activity. Now, the company issued 2,500 ordinary share per value 20. So that's an issue. So that one is an issue. We shall check if that was the increase, if we consider our ordinary share capital. So we have an issue of 2250 50 times 10. So that's also supposed to be 2250 times 10, which is around 22,500. That's around 22,500. So issue of shares tunaandika hapa. We have issue of shares. Issue of shares which is 2250 times 10, which is 22,500, which we shall confirm. To confirm now our let us confirm actually. So tuende pale juu kwa our ordinary share capital. So our ordinary share capital at the end ilikuwa 69,750. Now that to confirm if it is the same as this 22,500. Tuone kama the increase was the same. So it was 69,750 minus 47 at the beginning, share capital, ordinary share capital, pale kwa balance sheet. So ukichukua the difference between the balance at the beginning and at the end, unapata 22,500, which is the same as this one, 22,500. So pale kwa balance sheet, ukienda pale kwa balance sheet, we have the share capital. The ordinary share capital ilikuwa 69,750, 69,750 minus 47 to 50, 47 to 50. Balance, nini, wasema ikuwe the same as 22,500. So it must be the same with the issue tumepatiwa pale chini. So that was the issue. Tumemalizana hiyo. Then the company paid a dividend of 1,200. Dividend paid. So unakuja andika hapa. Dividend paid. You can confirm if it is correct. Dividend paid is 1,200. So dividend paid is 1,200. Remember the formula for dividend paid? So tulikuwa nasema dividend paid formula, mwenye nakumbuka, you are supposed to take, nikianza hii class niliwaambia how to get the dividend paid. Dividend paid, you're supposed to take the retained earnings at the beginning. You add profit after tax. You add profit after tax. You add profit after tax. So tunasema ukitaka kujua this dividend paid kama ni correct, this one ya 1,200, tunasema unachukua retained earnings, balance brought down. So retained earnings, balance brought down, balance at the beginning. So unaenda kwa balance sheet, hapo kwa balance sheet. So the retained earnings is the revenue reserve actually. Is the revenue reserve. It is 19,800. 19,800. Then you're supposed to add profit after tax. So profit after tax iko pale juu kwa income statement. So kwa balance sheet hapo juu yake. So the net profit after tax wametuambia ni 2,400. Ama 24. 2,400. That is correct amount. 2,400. Then uko chini the balance at the end ni kwa revenue reserve ni 21,000. So retained earnings, balance carry down. We are supposed to less it. Wamesema ni ngapi? 21,000. I hope when you get the difference utapata dividend paid. Of which that one is the in additional information washatuambia. Ukienda kwa additional information wametuambia ni 1,200. So confirm if it is 1,200. So 19,800 plus 2,400 minus 21,000. So it is 1,200. That's correct. So that's how you confirm. Kama haujapatiwa you need to compute it. So ukiangalia hii tumepewa na tumeconfirm it is 1,200. Ukiangalia accumulated depreciation tulikuwa tumeambiwa kwa swali ni 5,550 and then tumecompute. So those workings are relevant. You need to know them because you need to compute them kama haujapewa. Now I think tumemalizana additional information. So additional information is over. So we can prepare the cash flow now. We can prepare the cash flow statement. So huyu jamaa anaitwaje? Precious Ltd. Tutasema Precious Ltd. Let me use a different pen. Let me see if this one would work. Ama irisha ink. Tunasema Precious Ltd. Statement of cash flow. of cash flow for the year ilikuwa inaisha where is it, for the year ended at 1st March 2024. For the year ended that 1st March 2024. Aya, so tunaanza na profit before tax. So kama kawaida, we start with the profit before tax. Now, not profit before tax, actually, cash flow from operating activity. We say cash flows from operating activities. So in Kenya shillings, so it is in thousand, remember. So tunaanza na profit before tax. So we start with the profit before tax. So profit before tax, so tuende uko juu kwa our profit, uko juu kwa our income statement. So our profit before tax ni 3450. So 3450. Then we do the adjustments. We do adjustments kama kawaida. So start with the adjustment number 1. So the adjustment number 1 tukaanza nayo ni kama kawaida, tukaanza na depreciation. This is the common one. So depreciation. Now depreciation was removed in our income statement. So it was removed, so we are supposed to add it back. So tunasema depreciation. So depreciation acha niweke amount ngapi? 5550. 5550 ndio hii hapa. Here it is. Na kama uioni hapa, we were given iko kwa our additional information. The next item we can check is we have so tukienda back to our income statement, we have interest income received ya 900. Interest income. So interest income. Now interest income was added in our income statement pale juu kiangalia to 900. So if it was added, you're supposed to remove it. Tukiwa kwa interest income, tunaenda kwa interest paid. So interest paid iko wapi? Naona interest paid pale ya 3450. So interest paid. So say tulilipa. So kama tulilipa tunamaanisha we deducted. So we had deducted it. So tulilipa, we had deducted it. So kama tulideduct, we add it back. It was 3450 in the income statement. So hiyo unaenda pale juu kwa our income statement before kwa our balance sheet hapo juu. Aya, tukishamalizana hiyo, so tumefanya depreciation, that one is okay. Tumefanya interest paid, it's okay, and then tumefanya interest income. Then we have gain on sale of investment. And hii hapa. Our profit from sale of investment, it was, ikawa unaiona hapo 1800. I mean nilipata 1500. So pale anatuambia gain from sale of investment 1800. Na mimi pale nilipata 1500. Let us get the difference again. Tuone kama kuna mahali tulikosea. Tulipata pale walituambia ni 15300 minus 13500. Oh, it's supposed to be 1800 actually. Ndio nimeshangaa hizo figures hazifanani. Supposed to be 1800. So we have that one. So ndio hiyo. Na ndio hapa iko hapa juu. Kila pale kwa our income statement pale juu. Go to our income statement pale. Other incomes, we have the interest income received of 900. Then you have the gain from sale of investment. So gain from sale of investment. Gain from sale of investment. So it was added because it's a gain. So we deduct. So it was added, then we deduct. And then we need to consider another thing. We had half a gain. For disposal account also we need to consider that one. Either a gain or a loss. So we had a loss on disposal. Loss on disposal of an asset. Loss on disposal of an asset. Juu kama waliweka hiyo pale juu kwa income statement yetu waliweka loss. Yes, waliweka 450. So hizo data ilikuwa mzuri sana kwa sababu walikuwa wamekupatia hizo figure. Haukuwa unafaa kucalculate. So hizo figures ni wameweka huko juu. So it was deducted, so we add it back. So this question was actually good because those items you are not supposed to compute them. So mimi nimecompute, but they are there. But it is good you do them to confirm. So that we have it there for 50. So hii tumemaliza now. So we add. So 5550 minus 900 plus 3450 minus 1800 plus 450. So mimi napata 6750. 67 nikiongezesha kidogo ku 67 50 na hapa niseme 3450. 3450 instead uko sana. So we shift the Kenya shillings here to this part. So hii kuja hapa Kenya shillings na mwingine akuja hapa Kenya shillings. So we add them together. So let's add it. So we add. So 3450 plus 6750 is 10200. 10. So we say cash flow before working activity. Cash flows before working activities. Cash flow before working activities. Now, once we do that one, we can do the changes in working capital. So changes in working capital. Changes in working capital. Changes in working capital. We can start with the first one in inventory. Now, inventory unaenda pale kwa financial statement of financial position. Now, inventory at the beginning ilikuwa 16500, at the end ilikuwa 21600. So we have an increase. So increase in inventory. So you say increase in inventory. So it increased from so itakuwa ni 21600 minus 16500. So what is the increase? So this was at the beginning, at the end. So itoka kwa 16500 ikaenda mpaka 21600. So the increase is 1500. 5100. So remember the increase you are supposed to deduct. Then number 2. So let's say what tunasema we are supposed to deduct when your inventory increases ni kumaanisha umenunua, so money out. So when your inventory increases ni kumaanisha umenunua mingi. So when you buy so pesa inatoka, so money out. So that's an asset. Another one is account receivable. So account receivable ilikuwa 8250 kana 7050. So it reduces. So decrease in receivables. So that one means money in. So you have to add. So money in. So ilikuwa 8250 minus 7050. So ilikuwa 8250 ikareduce mpaka 7050. So that one you're supposed to add it. That's the money in here. So when an asset reduces, that's money in. When an asset increases, that is money out. So asset can increase, money out. Asset can reduce, money in. So this one is money in, so you add. Then payables. So kwa payables pale, let's confirm the payables. Payables ilikuwa 6450 ikaenda 7500, it may increase. So that one we are supposed to do what? To deduct. Save. Okay, before we go to payables, naona tuko na prepayments actually. So we have a prepayment there. Prepayments. So prepayments ilikuwa before tuende kwa payables, tuende kwa prepayments. Ilikuwa 250 kana 6900, it may increase. So increase in prepayments we are supposed to add. increase in prepayments. So prepayments ilikuwa hii itakuwa ni 6900 minus 2250. 6900 minus 2250. So 6900 minus 2250. That is 4650. 4650. You are supposed to less that one. So because it's an increase, so hiyo inakuwa ni where is it? Sorry, prepayments nimefanya mbaya. Prepayments ni 750 na 150. 750 na 150. Reduce 750 minus 150. So 750 minus 150, which is 600. Now prepayments ilifanya nini? Reduce. So kama reduce, what happened? So prepayments reduce, we are supposed to do what? To deduct. So we deduct the 600. So we deduct the 600. Aya. And then tumemaliza na assets. So we can go now to payables. Now payables, tukienda kwa payables account, it increase. So increase in payables. Increase in payables. Increase in payables. Increase in payables. So tukienda kwa payables, inaona ilikuwa 7500 minus 6450. 7500 minus 6450. Let me confirm. So 7500, that is correct. 7500 minus 6450. Narupatia 1050. So 1050 we add. 1050 we add. 50 we add. And then we have an accrual. Accrued liabilities. So is it an increase? So an accrual ilikuwa 1350 kenda 1800. So we have an increase also. Increase in accruals. So increase in accrual liabilities. Now increase across liabilities unasema ilikuwa 1350 kenda 1800. So it increase. So 1800 minus 1350. So 1800 minus 1350 hiyo ni 450. So kama kawaida liability, sorry, an asset a liability increase, we add. So we add it now together. And nimeweka pale pabaya. Ningeweka hapa. Ningeweka hapa 5100. I could have put it here 1000 people. 1200. 600. 1050. 450. So hapo I think itakuwa better. So that we get now the whole figure. So tunasema 5100 plus 1200. So hii ni kwanza tunafaa ku minus. This one is supposed to be minus 5100 minus 5100 plus 1200 minus 600 plus 1050 plus 450. So mimi napata minus 3000. So this is supposed to be minus 3000. Minus 3000. So minus 3000, now we can get the net gross cash flow or the net cash flow. Kumbuka kuna tax, so we can say gross cash flow from operating activity. We can say gross cash flows from operating activities. From operating activities. So tuna less. So minus 10200. So tunasema 10200 plus answer 7200. So ni 7200. Now we less tax paid. So we are supposed to less the tax paid. So less tax paid. Now tax paid, we need to do our working for tax paid. Now tunaenda kwa our, so we need to go back. We need to go back to our what? To our balance sheet. tuangalie kama tuko na tax payable. Yes, we have tax payable. So tukuje kufanya hiyo account hapa. So tunasema tax payable. So we need to come up with that account. So tax payable. So balance go down. So tax payable balance at the beginning is 750. Is 750. Then balance carry down. Balance carry down of 450. 450. Kama kawaida. Then you check the income statement. So income statement iko huko juu. So tunaenda kwa income statement iko juu. So tukaenda kwa income statement wanatuambia that the corporation tax in the income statement is 1050. So income tax. So unaenda kwa income statement wanatuambia 1050 tax. So the tax in the income statement is 1050. I don't know if you can see it, but me naona 1050. So you balance the account. So the balancing figure becomes the tax paid. Balancing figure becomes the tax paid. Tunasema 1050 plus 750. Hii ni 1800. Sorry, ningetumia a black pen here to be so confused. So this is what we have in the equation. 1050. Natupatia 1800. So it's 1800. So the balancing figure will be the tax paid, which inakuja hapa. Tax paid. Tax paid. So let's find the balancing figure. So minus 450. So 1800 minus 450. The balancing figure itakuwa ni 1350. 1350. So we less the 1350 here. 1350. So that you can get the net cash flow from operating activities. So net cash flows. Net cash flows from operating activities. So net cash flows from operating activities. So itakuja ngapi? 7200 minus 1350. So 5850. 5850. 5850. So tumemalizana the first part. So we can go to the investing activities. Cash flow from investing activities. So cash flows from investing activities. Cash flow from investing activities. Cash flow from investing activities. Cash flow from investing activities. So cash flows from investing activities. Cash flow from investing activities. Cash flow from investing activities. Cash flow from investing activities. We can start with the first one. Pale juu. Acquisition of investment. Tunaanza na hiyo. So we start with that one. Acquisition of investment. Ni ngapi? 11,700. Ya pili, we have sales proceeds from investment. Sales proceeds. Sales proceeds from investment. So tumetick. Hizo tumefanya. So acquisition of investment, we have the sales proceeds 15,300. 15,300. We have acquisition of machinery. Ilikuwa mbili. So ya kwanza, acquisition of machinery, we have 18,000. We have an acquisition of 18,000. Ndio hii hapa. Na ndio hii. Then the other one was 15,000. And the other one was 15,000. So ilikuwa mbili. So acquisition of machinery 18,000 and 15,000. What else? I think hakuna kitu kingine tumemaliza now. So 11,700. So kumbuke acquisition is money out. So we are supposed to deduct 18,000 na 15,000. Those are money out. So And then we have sales proceed. Tusisahau. We had a sales proceed hii hapa. Hii isisahaulike. Sales proceed of 750. So we had also another sales proceed. Proceeds. Yeah, 750. Hii hapa. So that one you get from the disposal account.